comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a gigatransaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
All righty, everyone. Welcome back to another episode of Final Settlement. Today is Monday, March 9th, 11:36 a.m. Eastern Standard Time. And we've got a big show today. Great show. I'm joined as always by Liam Nelson. And we've got a very special guest, Mauricio Di Bartolomeo. Hopefully I'm not butchering your last name. That was as best as I could do. But co-founder and CSO of Ledn. Going to be a really interesting conversation. Really excited for this one for a number of reasons. But Ledn, has been around for a while, which not many Bitcoin lenders can say effectively. The firm was founded in 2018, I believe, and you were there from the beginning as co-founder. And so you guys have seen multiple cycles. Frankly, one of the only lenders to survive sort of the last biggest blow up in 2022. And so that really speaks to the firm that you guys have built. And we'll get into all of that. We'll get into some of the latest developments on your side in the ABS market, an investment from Tether. And we'll get more into your background specifically, but maybe Mauricio, a good place to start is sort of just a high level, like state of the market. As I mentioned, Bitcoin is gone through multiple cycles where leverage has been a component of that cyclical behavior, to be honest. And so would like to get your view of kind of where we are in terms of leverage. Are we over-leveraged, under-leveraged? Was October of last year a major washout moment? Are we still seeing some of that right now? Curious your thoughts on sort of the state of the lending market as we sit here today.
Yeah, thanks for having me. Thank you, Brian. Thank you, Liam. And happy to chat all things Ledn, all things Bitcoin, and all things credit. So to start, I guess, to answer your first question on where we're at in the, what stage of the evolution are we in for Bitcoin-backed loans? I would say that when Bitcoin-backed loans first started, when we first offered Bitcoin-backed loans back in 2018, it was Bitcoin-backed loans were kind of on par with crypto-backed loans, right? They were all looked at as these very sort of speculative instruments. But from the very beginning, we at Ledn took a view that Bitcoin was the digital collateral. Everything else was just a gambling token, frankly, that hadn't really proven itself for as collateral. We believe that Bitcoin was different, and that's what Ledn from day one has been a Bitcoin company, right? And a lot of the success that Ledn is having today is having some of those early views that we held back in 2018 validated by the market. Ledn has never pivoted. We've always been Bitcoin-backed lenders. It's just that right now, the world has really sort of woken up to this idea that Bitcoin-backed lending is a loan and an instrument that you can use to buy a house, to start a business, to fund expenses, grow your family. This isn't the case for most other assets. And I think what you saw from really in 2025 was a complete bifurcation between Bitcoin-backed loans and everything else, right? And so today, what I'm seeing in the market is that Bitcoin-backed loans are being used very responsibly, right? What do I mean by that? These products came out to the market in 2018. In the early days, a lot of people had never used a collateralized loan before. They didn't know about margin calls or liquidations or how to protect yourself against a loan, right? They didn't know how to assess risk. They didn't know how to ask for proof of reserves. They didn't know how to look try to assess where a lender's funding was coming from and understanding how the model works, right? And I think that's come a long way today. If you look at the firms that are offering Bitcoin-backed loans today, many of them are much more responsible versions of the previous iterations, right? Like if you look at the BlockFi's of the world and the Celsius of the world, these are companies that had their own tokens. They were supporting all sorts of things as collateral. They were offering yield on Bitcoin. They were offering yield on all sorts of assets. And that's really where the problems came from rehypothecation, from taking collateral that had no depth. Why would you want to borrow against basic attention token? Like, where's the bid on that when the market goes south? There is no bid. That's what we learned, right? And so what's happening today is just, I think what I'm seeing at least is Bitcoin backed loans are understood. Okay, when people come into it, no longer there are people asking, what is an LTV, right? Like people are saying, okay, I'm starting on my loan. I see that if I take the loan now, I'll have to add more Bitcoin at these levels. What's the speed? What are the timelines to add more Bitcoin? So the questions are a lot more sophisticated. People understand the product. This is why you're seeing a lot less liquidations on a relative level on down moves like what we're having so far in February, right? I'll give you a very interesting point that was highlighted through the Galaxy Q4 report that came out last week. Since October of last year, there was a narrative being built last year. I don't want to say built or pushed. It was just sort of a narrative that was bubbling, which was this idea that DeFi worked and CeFi didn't. And therefore, DeFi is going to take over the world and CeFi is done. And we're seeing now in the Q4 report that is absolutely far from the case, right? Like the October 10th collapses in DeFi, like basically dismantled the DeFi book to the tune of 27%, right? They had never recovered. And now all of a sudden, CeFi is as big as DeFi, right? Like back on in the Galaxy report, like again, just this is not it's probably one of the best reports out there from an industry perspective, but it's still incomplete in that there's people that don't participate in it, right? But what this is showing to me, at least, is that DeFi, as I understand it, has a lot more other stuff in it. Bitcoiners don't use DeFi because there's no native way for Bitcoin to use DeFi. For you to wrap Bitcoin and throw it into one of these protocols, you have to take wrapping risk. You have to take basically custody risk, wrapping risk, smart contract risk, a myriad of other risks that are not really there if you're doing centralized lending with Bitcoin. So what I would say, just kind of bringing it back full circle, is that I think Bitcoin-backed loans has demonstrated its validity as a product that can be used responsibly, both from a user perspective, as in people that have using our product since 2018 have done well financially. This is why Ledn is here today, because the Bitcoin-backed loans have worked. If our product wasn't helping our clients build wealth or make money, we wouldn't be growing, we would be here, right? And we just had the best year in the history of our business last year. We're off to probably a better one this year so far. The others, and that's on the user side. Now, what about the capital side? How's the capital side feeling about this? Well, Ledn just completed the first ABS Bitcoin bond ever, 2 times oversubscribed, rated investment grade by S&P. And again, I re-emphasize this, 2 times oversubscribed in a down market. Okay, so investors love it, consumers love it. And I think that's kind of where we're at for Bitcoin-backed loans. I think this is why so many people are so excited about this product.
Yeah, no, thanks for walking through that. I think that's a fantastic overview of where we're at, and I love the distinction of Bitcoin versus everything else. I mean, that's something that we talk a lot about on this show and just in general with clients and prospects. I think it's slow and it takes time, but I think there is that continued recognition that Bitcoin is just fundamentally different than all these other tokens and crypto assets. And that becomes very apparent in washout moments like this, where you mentioned these low float tokens have absolutely zero bid when things go south. And so I think that's a very important distinction that obviously as a firm, you guys have recognized for a long time. So kudos on that. Liam, was there anything else you wanted to pull out from this Galaxy report that we pulled up here and that Mauricio mentioned? Anything worth calling out here? The other thing I did want to talk about that we mentioned was just block fills and the incident there. And if you had any thoughts on the perception of that, sort of maybe the realities of what's going on there. Is that an isolated incident, or is that a sign of more things to come, perhaps?
Yeah, so great question. And I think that the way I like to think about using collateralized loans in Bitcoin is that there's two major risks buckets. Number one is counterparty risk, and the second one is liquidation risk. Right? Those are broadly the two things that can go wrong if you're using a product like this. Right? For a while, in the early days, 2018 to 2021, because the industry was basically just being born, people had very little sense of this concept of platform risk. Every platform looked really safe. They looked great. They had great logos. They were shaking the hands of all these great investors, right? And all of a sudden, you realize, in March 14th, or no, that was the COVID crash. But back when Terra Luna collapsed and FTX collapsed thereafter, you had basically Celsius go under, BlockFi go under, Genesis, Voyager, Babel, so on and so forth. And it became very evident that platform risk, if you're working with a platform that is not doing things right, you can lose your Bitcoin, right? And from 2022 to 2025, I would say this was a huge point. And then many people ask, Ledn, how did you survive? What did you do differently? And we answered the question in the same way we would today. We don't rehypothecate your Bitcoin. We keep your Bitcoin in custody. That's why it's always there when you repay the loan. And that's why anybody can repay their loans and get their Bitcoin back at any time, right? We don't offer Bitcoin yield, right? There's no risk of loss because we're not lending that Bitcoin unsecured, right? We were the first company to do proof of reserves. None of the firms that went under had proof of reserves, right? So this idea of how to assess counterparty risk was a very big topic of discussion for anybody wanting to take a loan in 2023 and 2024 and part of 2025, right? What happened in 2025 was the market reached a new all-time high. And when people started looking up, all of a sudden, all those short memory, like basically you start getting this short memory effect where all of a sudden nobody cares about platform risk anymore. Everybody just wants the best rate. And because companies like Ledn are thriving and growing, you have other companies literally build Bitcoin-backed loan products overnight and throw them into the market to try to capture market share. And they will try to force feed that product into the market by offering off-market rates and terms in an effort to beat out companies like Ledn that have an 8-year track record, proof of reserves, the most competitive rates in the market. It's really hard to put out a product that is more compelling than Ledn, but the way they try to do so is by creating artificially low interest rates and building things that are completely, I would argue, in many cases misrepresented and say things like auto protection from liquidation. These loans don't get liquidated. These loans have this magic fairy dust that allows us not to have to liquidate you. And guess what? You don't have to pay us anything for that hedge. It's also included in the price. These are ridiculous ideas. And lo and behold, if the terms are too good to be true, they will fail, right? And so we just had a recent example of a firm, BlockFi, that did offer some Bitcoin-backed loans. And I believe they had also a feature where you wouldn't get liquidated because of some hedging that clearly turned out too good to be true. So what I would say is, I don't think this will be the last firm. I'm not trying to suggest that there's like massive contagion and that the next firm is, impendingly to go down. I think these are the natural consequences of irresponsible actors competing in a competitive space, right? And this is why it's so important. And so many people choose Ledn because we've been around for 8 years doing right by our clients every single time. And when you're coming to Ledn, what you see is what you get. We're transparent about our rates. We're transparent about how we source our funding. We're transparent about where your Bitcoin sits. Ledn is as transparent as you possibly can be in this industry. And I would be very, very skeptical of any offering that seems too good to be true, because 99 times out of 100, they have turned out too good to be true. And you're trying to save a penny, but you're losing your Bitcoin. At Ledn, we optimize for you keeping your Bitcoin. That is it. Are there cheaper ways for us to source capital that we could source if we were willing to work with groups that don't share financial statements? Yes, of course we could find cheaper money, but we don't, because the groups that we have standards when we interact with anybody. And if you cannot meet those standards, we will not work with you. And if that means our rate has to be a little higher than someone else's, that's fine. Because we're here to give you back your Bitcoin and to ensure that your kids and their kids can hopefully continue using Bitcoin-backed loans with Ledn.
Yeah, that's a great point. And on the block fills point too, it's worth highlighting too that even if you don't necessarily have a loan out with a platform like this that could be rehypothecating their clients' Bitcoins who actually have loans out, even if you're just using them to trade, like your Bitcoin could still theoretically be at risk because they have gated withdrawals for all clients at this point. So it's definitely important to highlight that a lot of these businesses and there's short memory in the Bitcoin and broader digital assets industry where there are always net new entrants who are coming into this space, right? If you have a growing industry, that's what you expect and would hope for. And BlockFills is one that I think they were backed by like Susquehanna and a bunch of other very big players who are grafting on some of their due diligence and processes that apply just to legacy financial assets, not necessarily Bitcoin itself, too, which is global 365 digital bearer asset, and just requires a little bit of difference in the way that you both consider risk as a platform as a whole. So while we've seen a ton of improvements and a lot of this industry growing up, I think that at the same time I wish I wasn't as cynical, but it seems like we're going to continue to see a lot of net new players who are backed by existing large financial institution players that are just going to try to graft on their existing risk frameworks and think that other players who have been in the Bitcoin space for a longer time are being too conservative and they're missing out on extra revenue too. So was kind of just curious, like your thoughts in general of why Bitcoin is different than some other legacy assets and why it deserves to be treated differently too.
Yeah, and listen, I think we'll get into this when we talk about the ABS, but a big part of what allowed us to do the ABS is the idea that Ledn has uniform collateral. Our book has all the same collateral, and it has size and scale with that uniformity, right? What you have with other players is at times they'll have a part of their book that's backed by ETH, and another part that's backed by Solana, and another part that's backed by Doge. And so when you're trying to put a smorgasbord of undesired assets into a pool, it creates a lot more questions than would, hey, do you just take Bitcoin? And to the point you just made, Liam, about other products and services offered by these platforms, that is in fact the big point that not everybody got. Not everybody, I think, fully distills about the previous collapses of BlockFi and Celsius and others, right? Like, if these companies had been taking Bitcoin or even ETH and keeping it safely in custody and lending you dollars back by it, and then giving you back that ETH or that Bitcoin when you repaid those dollars, you could do that pretty responsibly, right? Like that, there's a path and a way of doing so. What starts messing things up is you do that, but then somebody else comes to you and says, hey, I want to earn yield on my Bitcoin. Oh, but to generate the yield on Bitcoin, you have to lend that Bitcoin unsecured to a third party. Well, if those two products are offered by the same legal entity, and you underwrote the loan and the person you lent the Bitcoin to went under, then the loan guy is also under, and the yield guy is under, and the trade guy is under, and everyone in the boat is under, right? And even back then, banks today don't operate this way. Banks today, if you're dealing with their trading arm, you'll see that the legal agreements say so-and-so trading, Inc., legal entity, right? If you're doing the custody, they'll give you your services are being provided by so-and-so and so-and-so. And so that ring fencing, even that ring fencing didn't exist back in Bitcoin. So that's why it was like, if you think about a boat, an analogy of a boat, you could be a massive boat, but if the boat doesn't have compartments underneath, you just perforate the top of the boat, and everyone on the back of the boat is going to sink just as deep as everyone else, right? And so in traditional finance, and again, Ledn operates in a sort of Ledn operates in a bridge between Bitcoin and traditional finance, because we need to source capital from traditional finance and we need to deploy that capital to Bitcoiners. So we need to be able to speak to both, right? And so how do we ensure we're speaking to traditional finance? Well, we're We offer proof of reserves before nobody else did. We actually pioneered proof of reserves for a lending business, right? We are SOC 2 Type 2 compliant. We are regulated. We have a regulated entity in Cayman. We have a regulated entity in Spain. We're going through a lending license in the US. We have a full compliance team. Everything's KYC'd. So we've built the business in this way, trying to deliver all of the sort of assurances and procedural guarantees that have been learned through hundreds of years in lending and TradFi. This is why we were able to get rated by S&P, right? Where I think we're one of the few companies that could ever even try to do this. But to your point, Liam, is like so many lessons around risk management have been learned in traditional finance that shouldn't just be discarded and forgotten just because we're trying to build something in the digital world, right? Like our job is to bring those learnings, add our transparency and efficiency, and make them better. But we're not gonna do ourselves any favors if we're just forcing ourselves to relearn the same lessons that everybody learned back in the heyday, right?
Yeah, absolutely. I love all of that. And one thing you noted in there that I think is worth calling out is like there is almost this there's a perverse incentive for other players to come in and basically try to undercut you with a worse product in terms of the rate, right? Because that's very attractive to the average retail participant who's not thinking super critically about, well, what does counterparty risk actually mean? Are they hypothecating it? You know, they probably haven't even gone down that path of thinking through those levels of risks. And we see very, very similar things on the custody side. You know, our business at Onramp is focused on Bitcoin custody. We do something called multi-institution custody, which leverages multi-sig and distributes the keys across multiple independent institutions. And, you know, it's very similar in the sense that, you know, if someone is holding coins on Coinbase, they think they're paying nothing for custody, right? But it's like you're actually paying for that tail risk that something catastrophic goes wrong and you have a single entity failure and your allocation maybe goes to zero. So maybe you're actually paying 100% of your Bitcoin. And it's a very similar dynamic in lending markets where, you know, sort of being too focused on a 1 to 3% difference in an interest rate. It's like, well, what's behind that? Why is it a little bit higher? What is the pool of capital that's supporting it? What does the custody setup look like? All of those things are super critical to the actual risk of the underlying going to zero, not just the interest rate you're paying. So I think that that's super important, and glad you called that out as something that I think that's what takes us to a more mature place, is people recognizing those things. And how we get there is folks like yourselves being super transparent about those risks and explaining in very clear terms why you're doing things the way you're doing them, why your rates are what they are, all those types of things.
Appreciate
go
it,
ahead.
man. It's no. I mean, this is you know, it's funny because when we first started this business, taking this approach was perceived by some to be incredibly boring,
Right.
Incredibly conservative, not exciting enough, and it's been fascinating to see that, you know, after a period of time where that view was getting challenged and challenged and challenged, now all of a sudden it is the view that seems to be able to scale, right? Because who's coming in today in size and deploying all these new investments, not ironically, I think a lot of us expected this, but they are institutions, right? Like, you know, who are the names that we got excited about now? So-and-so's BlackRock's ETF and WisdomTree's ETFs and so-and-so's ETF and Michael's buying a few billion more. Like, these are the names and numbers that make this market move now. And the kind of things that these investors value is precisely what we've been building for 8 years while being perceived as potentially boring, right? When you took a view back then that, no, most of this stuff is speculation, I think this all comes back to Bitcoin eventually. But you're going to lose so much money on the way. How come you're not going to list all these other hundreds of thousands of tokens and you're missing out on all these trading fees? It's like, no, because if you get distracted by those things, you may lose sight of the actual prize, right? Which is exactly what happened to all these other lenders. Like, Ledn was under the shadows of these dodgy giants, okay? You know, BlockFi was 10 times bigger than Ledn. Celsius was 5 times bigger than Ledn back when they existed. Today, we're the biggest lending company in the market, right? In the Bitcoin-backed loans and consumer Bitcoin-backed loans. that is because we never veered. We never strayed from our path. So many people came asking us, BlockFi is, Celsius is doing 1% loan, guys. Why can't Ledn do 1% Bitcoin backed loans? And we said, because our cost of capital is 9. Like there's no way we can keep your Bitcoin safe and give you this dollar at 1. Ask them how they're doing it. But many people didn't ask the question. They just, no, we could have said, oh no, we have to get into the business of 1% Bitcoin backed loans. We're going to start rehypothecating. Let's relend the living lights out of the Bitcoin, find a cheaper provider. Let's make this happen, guys. No, that is not the mission. Okay. The mission is to keep your Bitcoin safe and to lend you and to tell you what the money costs and to charge you a small spread on it so that it makes sense for Ledn and can keep our lights on organically. And then the business will scale, right? Because if I don't do that, if I do anything except for that, even if I win, I lost. Does that make sense? Because at best, I have a book of speculative loans that nobody wants, and they're priced completely bonkers. Like there's no market for these loans. Or I had to liquidate a token that didn't have a bid, and the business went under. And so, to us, it was always about no. There's no shortcuts to this. We have to basically prove the model is the model and why it is this way, and wait to people to realize that this is it. Now we don't control, we don't have a crystal ball. We didn't know all these guys were going to disintegrate in a sort of nuclear catastrophe one day because of Sam. But that's what happened, and we were there to pick up the pieces. And we've been there to rebuild the sort of market on the foundation that you should use proof of reserves. You should not be relending collateral. You should be telling people where you get your funding from and how much it costs, so that they know that the model is organic. Those things I know, are exciting today, but back then everybody was like, "Ledn, what are you doing?" And today we're very proud to say we're still the same people we were back in 2018. We just have a whole lot more experience under our belt, a lot more now capital, and the size to start doing a lot more exciting things like going into the ABS market.
Yeah, that's awesome. And we'll get to the ABS stuff, but maybe this is a good spot to zoom out a little bit and go back to 2018 and maybe even before that in terms of your specific background, Mauricio. I'm curious how you got interested in Bitcoin initially, and then maybe it would be good to hear some just early, how the firm was created in 2018, what the mission was then, and to your point, like how it's evolved, but sort of, stayed on the same mission, but those learnings over the past 8 years, how that's developed. And then we'll get to the ABS stuff and some other news and developments.
For sure. So I was born and raised in Venezuela. And so my family, we all grew up in Venezuela. And as Venezuela started falling apart when Chavismo came in, I was 15 when Chavez took office for the first time, and saw the country basically fall apart gradually, then suddenly. And I witnessed basically expropriations of private property on TV, my dad shutting down his factory, my friends closing down their factories and leaving. I was there at the protests after Chavez died, and they stole the election through the Maduro regime. I was throwing rocks at the protests, and I was there with everyone else. And that day was the first time that I remember hearing real shots, real bullets shot at the protesters, who I was with. And some people, one guy I knew in particular, got shot and killed that day. And I went home that night because a lot of us wanted to keep protesting, me and my brother. But my mom basically said, my mom and my now wife sat me down that night, and they said, you have nothing to gain and everything to lose by staying here. You're the only member of our family that has a semblance of a life outside of this country. We believe it would be a much better use of your skills and time if you went back out and continued building a life out there so that you can pull us out from this mess if this thing falls apart. And I went back, and that was 2014. And that election is what started the sort of mass migration you see in Venezuela today and hyperinflation, because it was sort of a done deal that the country had been taken over by these cronies. And hyperinflation, that's when hyperinflation starts. And I'll do a little sidebar to highlight the difference between inflation and hyperinflation, because I think a lot of people consider those two things to be an extension of another. They're completely different phenomenons, in my opinion. And inflation is just a rational response to an increase in the money supply, right? In a fixed state of assets. So you have 10 buildings and $10 million, you print another $10 million, the same 10 buildings, each building goes up 2x. That's inflation, right? That's rational. Hyperinflation, there's no math. It's, I have to leave. I don't believe I don't believe these assets are worth anything. I am willing to take anything. I will do a market sell order without looking at the book, right? And I will get filled at whatever I get filled. That is hyperinflation. So you're basically fire selling your currency, you're fire selling your assets, you're fire selling your business. And it basically all sort of rational goes out the window. You know, you'll be offered 2 cents on the dollar for something, and you'll say, fine, I'll take it. That's hyperinflation. It's fear of not ever getting anything back for those assets. And so it's emotional. It's not rational. You're not thinking about price or percentages. You're getting out. So that's the environment that Venezuela's in, right? And my friends are all fire selling their stuff to get out of the country. In the middle of that, my youngest brother was graduating, my youngest brother, Mario. And he didn't want to leave the country. So he pitches my dad on all these entrepreneurial ideas. And my dad says, no, you gotta go. You gotta go like your brother. You gotta go so you can take us out. And my younger brother's more rebellious than me. And he basically goes to my dad with an ultimatum. And he says, Dad, I'm going to do this whether you want to or not. You can choose to support me. If you don't support me, I'm leaving the house. My dad sends me the email. He basically says, your brother's serious. What do you think? You went to school for finance. It's the Bitcoin white paper. My brother wanted to start mining Bitcoin in Venezuela with subsidized energy. So that's how my brother starts mining Bitcoin. All of a sudden, he found a way of getting Bitcoin in a hyperinflationary country with very cheap energy. So he found a way of basically the only way of making good money in Venezuela that couldn't be taken away from the regime. My middle brother starts mining, my parents start mining, my uncles start mining, my cousins start mining, my friends start mining, and I start building mines with them. Well, actually, first I approved the sort of project. I approved it by reading the white paper, and I said, yeah, this seems to be like the least insane idea. And so then I fly back to Venezuela 6 months later, and I see this guy has double the machines, and he's looking for places to rent. And I asked him to show me what he was doing. He took me into his facility. He sold Bitcoin for bolívares at the fair market rate, which we can get into. It's a long conversation between what is a fair market rate in a hyperinflationary economy. Sneak peek or it's not what the government says it is. That's basically the answer. But anyway, he sold it. And when I saw what he did, what Bitcoin did for my brother, and what it did for others in Venezuela, I was instantly sold on Bitcoin as a tool. And I started basically trying to figure out what I could do with it. Everybody was mining. Everybody I knew was mining. They were making money off of it. So I started building a mine. And I convinced my best friend from university, Adam Reeds, to build a mine in Canada, where I was living. We had the same issue in Canada that we were having in every other mine, which is we have Bitcoin revenue, but we have fiat expenses. And selling the Bitcoin to pay for those expenses was the dumbest thing we could possibly do. Every single time it happened, we could never buy back the same amount of Bitcoin. So we went out and looked for a loan. We got laughed out of the room every single time. That's it. Like one of the favorite answers we got was, Bitcoin's not an asset. Bitcoin's not an asset. Who would ever do that? And so we looked at each other after like the fifth or sixth sort of laughing out of the room, and we're like, we should do it. Like, we'll do the loan. We'll solve our own problem. And so we put our heads together and we put a plan for Ledn. We raised a little bit of money in 2018, and we set out to build a Bitcoin-backed loan in the most transparent, quote-unquote, boring way you could possibly think of. Show me it's in custody. Show me it's safe. Give me a rate. And, just give me back my Bitcoin when I pay you the loan. And so we did Canada's first Bitcoin-backed loan November 2nd, 2018 to Francis Pulio and Bills. Shout out to Francis. And then the rest is history. It kind of snowballed from there. We continued helping miners. the beginning was Bitcoin businesses, miners, mostly developers, people that got paid in Bitcoin. And then from there on, it just snowballed into today, the sort of consumer product has become, right? Our clients today are not just Bitcoin natives. They come from everywhere.
I love that. That's really appreciate you sharing that. That's a fantastic story, and really appreciate just like how far we've come overall as an industry, and especially your family too. I guess like even it would be super helpful to understand, like, especially given that background, what the recent ABS news really means for Ledn, what it means for the industry as a whole, and just maybe share a little bit more details on what exactly the securitization of some of these loans actually means overall for some of the listeners who may not fully understand.
Yeah, so let me kind of paint the picture around why this is such a big deal and why I believe it's going to be so transformative for the industry going forward. So if you look at what we do for a living, like what Ledn does as a business, is we source capital from people that have dollars, and we lend that capital to people that have Bitcoin and don't want to sell it, right? So each lending product has two clients. There's the person providing the dollars, and then there's the person borrowing the dollars. So any lending product that truly scales has to have a right balance between what's in it for the lender and what's in it for the borrower, and protecting both, okay? And most importantly, you have to have a scalable source of those dollars and a scalable way of deploying those dollars, right? What's historically, and I think if you ask any Bitcoiner this over the last 5-6 years, most people, increasingly so today, will tell you, I will never sell my Bitcoin. Bitcoin's I don't want to sell my Bitcoin. It's a great collateral asset. Bitcoin is collateral, right? So the demand side has been proven, check, right? Like people don't want to sell the Bitcoin, right? The supply side, if you look at who's been lending dollars to this industry, by and large, it has been, up until now, crypto native firms or companies. So these would be groups that have very large balance sheets that are still in the crypto space, that want to deploy cash because they understand the risk reward and because they just want to support the industry, and I think it's a great risk return, right? So historically, who has been providing this capital is crypto native balance sheets, right? So in the era of Genesis was a big liquidity provider. Today, in the era of Tether and other stablecoins, you have Tether as a big institutional lender. You have a lot of these foundations that raise large amounts of stablecoins, dump them right back into DeFi pools, and that's really where a lot of the liquidity comes from, is from these crypto native balance sheets. If you round all up those balance sheets and add them all up, you get a number that's somewhere in the billions, okay? And that's fine. That's not a small number. But Bitcoin is a roughly $2 trillion asset going on, we believe is going to get to $5 trillion in the next 2 to 5 years, okay? We believe that the Bitcoin-backed loan market is going to grow into the trillions, right? So you need to have line of sight into a pool of liquidity that is that deep that you can source from. The ABS market, and ABS is asset-backed securities. So the ABS market in the United States alone is estimated between $2.5 to $3 trillion in size. Now, these are ABS bonds, securitized bonds. What these products do is they package a lot of credit card loans or auto loans or mortgages, and they package them up and sell them to these institutions that want to earn interest, right? And what we have done now is, for the first time ever, is we have done the same thing that banks and others do with auto loans and credit card loans and other types of mortgages. For the first time ever, we've done this with Bitcoin, right? We've packaged up Bitcoin-backed loans into an ABS, and we've sold that ABS into qualified investors in that market. Now, importantly, why do investors invest in this type of product? Well, because these products historically are rated, and they are rated investment grade. And what does that mean? It means that a company like S&P has gone through the offering, the management, the assumptions, the modeling, the operations, the sort of the risk management of those loans, and has stress tested all those assumptions, has gone through all their legal agreements, and has basically put those models through every possible scenario they could think of to assume what the potential losses could be. And then based on the expectation of loss, if the expectation of loss is small enough, they can then assign what's called an investment grade rating to that instrument, which means that now a pension fund or an insurance company that most of them have mandates that they can only invest in investment grade stuff can now look at the deal and potentially invest in the deal. Why is investment grade, the investment grade category, so important? 80% of the ABS market that I just mentioned, so out of those $3 trillion, 80% of it is investment grade. All this to say that the non-investment grade section of the ABS market is very small. There is no bid for it because the big bids are in the investment grade category. So it is very important to have an investment grade product if you want that product to scale in the future, right? Because that's where a lot of the demand is. So we, for the first time ever, work with S&P for them to issue the first ever rating of any Bitcoin ABS product in history. This is the first ever Bitcoin ABS product to exist. And as a first-time issuer for this product, Ledn received an investment grade rating from S&P on the first-time issuance. This deal was marketed and sold coincidentally, not by design, but coincidentally, while the market was crashing from the 80s into the 60s. And the funny part about this is many of these qualified investors that were investing into this product for the first time had the question, well, how will your market hold up in a down market? What if Bitcoin dumps, 40%, 30%? What's going to happen then? And the funny part was this was happening as we were pitching the deal, and we were pulling out data in real time, showing them that our system was working perfectly. So not only did the deal close, not only was there no change to the rating, but the deal was 2 times oversubscribed, more than 2 times oversubscribed. So we have confirmed that there is understanding, growing understanding, and demand for this type of product in the institutional ABS investor market. And the other thing that I will highlight as to why I think Ledn is one of the few, if not the only company that would be able to offer this, is because of how important the considerations are to even have S&P agree to review your deal, right? And let alone, get close to an investment grade rating. You need to have 3 very important things to have a deal like this be possible. Number 1 is you need size. Our offering was $200 million, but you need to have multiples of that in available loans to vend into the facility in case some loans get repaid or closed, right? And so you need to have a lot of scale, because the other thing is you need to have, the offering needs to be in the hundreds of millions of dollars for them to, for it to be feasible. Then you need to have multiples of that in order to be able to vend into the facility, right? So at Ledn, we were, our size, at nearly $1 billion towards the end of last year, that allowed us to have enough of a ability to sell and inventory to vend back in. The second one is we have an 8-year perfect operations track record that we can show. And that is the benefit of having been doing this and only this for 8 years. Because they can now go back 8 years in our tape and see that our liquidations work perfectly as they should every time they were needed, right? And then the third one is Ledn's regulatory posture. Ledn is a fully regulated company, has never had fines, has never had issues, has never had run-ins, we've never had our tokens. We've never had anything like that. And so that allows them to get comfortable working with somebody like Ledn. I know that was a long rant. I'll pause. But
no, that
I
was
could wax
awesome.
poetic on this.
That was awesome, and huge congratulations to you guys, because I totally agree. This is a pretty large milestone because, as you referenced, there's historically been a mismatch in terms of, we know there's a ton of client demand, Bitcoin holder demand to take out loans against their Bitcoin. What's been less robust or perhaps sustainable is the dollar side, the capital side that needs to support those loans. And I think that's also, frankly, why rates historically have been so high to take out a loan. It's because of that mismatch. So I'm curious, given this development, which I agree is a massive milestone from just a signal perspective, but also sort of a sign of maturation. What do you think this does going forward in terms of, again, that, adjusting that mismatch, maybe, more and more capital gets interested. I think part of it too is just a greater recognition of Bitcoin as pristine collateral. Just sort of education around Bitcoin, what it is, how it works, why it's not super speculative, why it is this, in many ways, a risk-off asset, and really great collateral. What do you think this does going forward in terms of the lending market in general?
Check out earlyriders.com for all the latest in Bitcoin investment research. Now back to the show.
Great question, and I'll respond with an analogy. I think this will do to Bitcoin-backed loans exactly what the evolution of financing with solar energy projects went, right? And my business partner Adam used to work in renewable energy financing before we got into Bitcoin. And at the beginning, when you were putting out these solar panel projects, a lot of the investors didn't know how long the panels would last. Like, how do I know this panel's going to last 20 years? How do I know this panel's not going to break? How do I know it's still going to be as efficient 5 years out? And so they had a lot of these questions. They didn't understand the asset. They didn't understand the security, the asset backing the cash flows, right? And as time went on, and they were able to demonstrate that, oh, yes, these panels do last 10 years. Okay, check. Oh, yeah, the efficiency on the intake does maintain as they said it will. Okay, check. For the next deal, I'm willing to take a slightly lower return because I think the risk here is lower. And so on the subsequent issuance, the rating was better and the rate was lower. And so on and so forth until it basically got to diminishing returns to become basically at the beginning, there were a lot of incentives for solar, and then the incentives were taken away, and then the rates kind of just sort of landed at a sort of more sane place. I think the same thing will be true for financing Bitcoin-backed loans. Don't forget, yes, Brian, Liam, myself, we've been here for a decade, right? So we know Bitcoin, we get it. We've seen the liquidations. I've had to press Bitcoin sale orders in the darkest hours of March 14th, and I've seen them go through and get filled like butter. And when you see that as a risk manager, you say, "Wow, like this thing really does what people say it would do." And so this conviction just grows and grows, right? A lot of these institutions, this is the first ABS they've ever invested into. The liquidations that we were showing them during the roadshow was the first time they've ever seen it happen, right? And so as they get more used to, as the dollar side of the equation gets more used to Bitcoin as collateral, that price will come down. And as that price comes down, the very fascinating dynamic with loans is that the amount of things I can do with a loan versus the rate, like basically the usability of a loan versus the cost of a loan has this asymmetric relationship where if you drop the rate over a certain point, the range of things you can now do with the loan go exponentially, right? Because all of a sudden, if it clears your cost of capital, you can do a lot of things, right? Like you can basically use that thing to start a business, to buy a house, to buy a car, to buy a phone, to go traveling, to invest in other assets, right? And so as the cost of capital goes from the double digits into the single digits, that's I think going to be the first chasm we're going to cross. It's like Bitcoin-backed loans are now single digits. Wow. And after you go down to the single digits, then the next one is, if you look at the spectrum of the property loan stack, so there's like first lien mortgage, HELOC, second lien mortgage. You're basically, right now, Bitcoin-backed loans are in private mortgage territory, okay? The next stage is going to come into HELOC territory, right? From there, you're going to go into first tier territory eventually. And when you go into HELOC and first tier territory, all of a sudden the sort of amount of things you could do with a loan, is everything, right? Like I don't sell loans. I sell your new house. I sell that new car. I sell you quitting your job and starting your business. That's what Bitcoin-backed loans allow you to do, right? And so once those thresholds start coming into, like I said, first it'll be the sub single digits, and then we come into, more comparable to other types of secured lending. Then I think think about it. Like if I can give you the same rates of a Bitcoin backed loan than I do with a house, and you don't have to get income to qualify. You can take that asset anywhere. It's no longer stuck to where you live, right? You can do you can use it in real time from anywhere in the world. It's the same rates. This is the other thing. When I talk about these rates, I talk about these rates becoming available to everyone in the world. Right now, the only person that can access sub 10% private mortgage is America, right? Like no one else can do that, and maybe parts of Europe. But I do think that these loans you're going to see a Cambrian explosion of Bitcoin-backed loans as these rates come down. I'll do a quick sidebar. Why I think it's so important. If you look at the asset-backed underwriting model we have today, it's income-based. You can have a $2 million house paid outright, and you have no income. And you go to the bank and you say, I want a HELOC for $500,000 of my house that I own free and clear. And they'll say, great, what's your income, Liam? And you'll say, oh, I just retired because, I own this house outright. And they'll say, we're sorry, Liam. You don't qualify for a loan, even though you own the house outright. You have no debt servicing capacity, Liam. And you'll say, oh my God, this is outrageous, right? With Bitcoin, you can do this, right? And so all I'm trying to say is this income-based underwriting model for asset-backed loans is disconnected from our real world. Like most of the full-time jobs that we have today either don't exist or are overtaxed. And so if you're a young person and you're trying to start your own business and you can't get financing basically anywhere in the real banks, and at Ledn, you can get 50% of the value of your Bitcoin holdings, are you not going to get financing, or are you going to get Bitcoin-backed loan financing? So what I'm trying to say is our underwriting model is much more aligned with the future of where the world is headed. And I want to touch on the difference between Bitcoin-backed loans versus ETFs, but I don't want to keep derailing the conversation. I'll pause.
No, I think that's fantastic. I think just one thing, even before going to that there too, is we've at Early Riders invest in Bitcoin infrastructure as well, and specifically very secure products that will essentially allow clients to maintain and not introduce outside risk and reduce risk as much as possible for all types of clients. And obviously, you've been in the space building Bitcoin related services and seeing a lot of appreciation in Bitcoin's price itself. It came out, I think you published recently that you just surpassed 100 million in annual recurring revenue, have an investment from Tether. Would just love to hear a little bit about how you think about working in the Bitcoin infrastructure space, providing services there, and why that's been such a an interesting business for you and Ledn as a whole.
Yeah, definitely. So, one of the, as an early Bitcoiner myself and my family, just through life and through managing your own position, you kind of get a good sense of what you would like to do with that Bitcoin or what other investors might want to do with that Bitcoin. And frankly, also what the sort of limitations are there as an asset. Like what can you do with your Bitcoin? So broadly speaking, you can do three main things with your Bitcoin. You can hold it, you can trade it, and you can borrow against it, right? Like hold it is, now holding it, you want to hold that safely and you want to transfer that safely, right? So then you get into multi-sig and multi-institutional and, what is safe, and as the amounts of Bitcoin you're managing change, so does your determination of what is safe and responsible, right? So for everything, right? Whether you're holding it, whether you're trading it, whether you're using it as collateral, right? And so I think that Bitcoin, as I see it, is a tool that is used by people to protect their wealth, right? And largely what I've realized over time is that the type of person that values the things that Ledn offers is the person that has built wealth over time. They have wealth that they want to protect. And they've also been around long enough to see that if you don't choose the right partners and if you don't have the right setup, all that hard work, all that wealth can just go away, right? And so at Ledn, we focus very much on optimizing for security and transparency and safety. And that is the promise we make to everybody that works with Ledn. And I think the person that ends up that values this type of offering happens to be a person that with a lot of sacrifice build their wealth, and they don't want to lose it, and they want to basically work with the group they think is doing the best thing or working the hardest to keep that safe. I think that the amount of people, the Bitcoiners that value these things, is only going to grow over time. If you look at the profile of people that have been getting into Bitcoin recently, outside of the original sort of first adopters, you're having a lot of sophisticated Wall Street investors or company treasuries, governments. And so the people that are entering Bitcoin are not speculators. They are investors looking to protect wealth. And this is why I think companies that are working on services that optimize for protection, that optimize for transparency, for compliance, and for security, I think are going to see a lot of growth, because I think there's always going to be the person that wants to hold their Bitcoin in self-custody with no KYC and have it sort of, completely off grid and have it in the sort of, more sovereign individual type of stance. But increasingly, I think you're going to see companies and sophisticated investors that are going to want to have a big part of their portfolio in Bitcoin, and they want to have it with the same assurances and guarantees that TradFi has built over time. And I think that what you guys are building and what Ledn's building and what other sort of qualified custodians and others are building bodes very well for this future. Because I think that the person that there's only going to be more and more people that value the type of stuff that we've built. And for that reason, I think companies that are building in this space stand to do very well.
100%. That's very well said. I think it might be a nice place to wrap, because I know we're coming up on an hour. But one thing I did want to reference, and we sort of have alluded to this throughout the conversation around this transitional moment, in a sense of what Bitcoin was for the past 17 years is changing. It's becoming an institutional asset. It's becoming much more ingrained in the sort of traditional finance rails. And so one thing I did want to ask you about, Mauricio, is like the JP Morgans, the Morgan Stanleys, the Bank of Americas, who are now getting into not only the custody game, but probably going to start doing loans as well. I guess first question is like, is that scary competition or is that validation for you guys? And then, what does that do again? How does that change the market in general of moving, a little bit less from purely retail, Bitcoiners who've been in it for a long time that just want to get a loan out, to this more institutional playing field? Have you seen that, guys? Have you guys seen that shift already occurring in your sort of client mix today? And how are you preparing for the future?
When it comes to holding Bitcoin securely, peace of mind starts with architecture. Onramp's multi-institution custody distributes control across 3 independent regulated key holders in a 2 of 3 quorum. No single point of failure, no pooled or omnibus exposure, segregated client-titled vaults. You retain full legal ownership while Onramp coordinates security, compliance, and operational workflows behind the scenes. It's strength of many delivered through the simplicity of one. Multi-institution custody is the foundation for everything we build. Sound infrastructure that distributes counterparty risk and provides fault-tolerant resilience with clear audits and institutional controls. And now, Onramp is piloting flat, predictable pricing, making best-in-class Bitcoin custody and financial services more accessible now than ever. Onramp, strength in many, simplicity in one. To learn more, check out onrampbitcoin.com.
Yeah, great question. So a couple of things on that point. So the first thing I'll say is definitely banks are looking at this space and increasingly more interested in working or deploying or making moves in this space. So I'll tell you from experience, 4 years ago, we went to banks and said, hey, are you guys interested in, lending institutionally for Bitcoin-backed loans? And they're like, get out of our room. right? Like they weren't there. Today, those same banks are calling us. And they're saying, "Hey guys, would love to reconnect." It feels like every other day we get a call from a random bank that is interested, and they heard about the ABS or whatever, right? So definitely banks are interested, and they are making moves to come. I do believe there are some structural limitations for banks, and that's more so on the sort of capital ratios and regulatory side that doesn't necessarily forbid them from entering, but places quite a few restrictions for them sort of entering the space outright. I think everybody sort of assumes that banks are going to come in with these like 0% deposits and start lending into Bitcoin. But the truth is, like, those deposits compete against um, real estate loans and student loans and other types of loans that are sort of more, I would argue, have a more of a strategic angle to the United States. And so I still think it's TBD on the timeline and the format in which banks come in, but they will participate, right? Like, saying they won't participate is ludicrous. We've always believed they're going to come. And I think that what this will do is this will elevate the quality of Bitcoin-backed loans in the market, right? Because it'll force companies like Ledn to become always more efficient from a cost perspective, from a distribution perspective. But at the same time, it'll also force the banks to wake up. Why? When is Bitcoin most volatile? The weekends. When can you not operate in a bank? The weekends.
Yep.
Right? So, okay, let's say you're taking out a Bitcoin-backed loan. Bitcoin tanks Saturday, 1 a.m. That's the moment you wanted to take out that loan to buy more Bitcoin. You're going to wait till your bank opens on Monday? Or you're going to go to Ledn? Right? So either the bank puts up 24/7 service, or you're probably still at Ledn, right? Like, imagine for a second, you took a loan when Bitcoin was at 70, Bitcoin reached 250 over the weekend, and you wanted to take profits on a Saturday. Where are you going to do that? Oh, but the bank was offering me 1% less. Oh, okay. How much does Bitcoin move on the weekend? Let's play that game. So you're going to save 1% but be locked out after hours for that 1%? Is that worth it?
Yeah, it's a good point. I think they know this though. They're embracing 24/7. They know they need to get there. I think
totally.
Yeah.
But imagine having to run, like, so how are you going to do this? Right? As a bank. So what? You're going to stand up a new Bitcoin team that's going to be available 24/7, and are those guys in the East Coast? Are those guys in the West Coast? How big does your book have to be to manage that service tier? Plethora of questions, right?
Yeah.
And so I'm not saying we won't get there or that we cannot get there. I'm saying that both companies, like from the Bitcoin natives, we have to make sure we are, the name of the game is, we have to but we have to remain competitive from a rates perspective and from a capital sourcing perspective, right? We got the distribution, we got the service, we built this product for the end user. We get them better than the banks, right? Like, I think nobody can argue that, right?
Yeah.
The banks may have more money, but if we play our cards right and we can tap into the right markets, we should be able to take even playing field on that. And
100%.
At that point, it'll become a service game. So the real bet is JP going to serve Bitcoiners better than me? Let's go.
Right.
It's a market.
Yeah.
It's a free market. Let's go.
No, I totally agree, because we get questions as well on the custody side of like, okay, well, this makes sense. Multi-institution, I get it. Distributed risk, more fault tolerant, robust, all of that. But like, why isn't JP Morgan just going to go build this? And it's like, well, okay, let's see them do it, because there are a lot of intricacies, there's nuances. And so I would totally agree with you. There's a ton of advantages to the Bitcoin native players with all of this, whether it's the lending markets or the custody side of things. So yeah, I would totally agree. Well, Mauricio, this has been a fantastic conversation. Really appreciate you spending some time with us and walking through everything that's happening at Ledn and the lending market in general. Anything else you wanted to leave the audience with, or where people can find out more about Ledn?
Sure, yeah. Ledn.io is our website. We are at HODL with Ledn on X. I am at Cryptonomist with an A at the end, Cryptonomista on X. DMs are always open. Stay tuned. Don't keep turn your notifications on. We got some exciting stuff coming this month, and hope to do this again soon.
Awesome. Well, really appreciate it, Mauricio. And yeah, we'll have to have you back on when the next awesome announcement comes out of Ledn. So appreciate it. All right.
Thanks, man.
Take care.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.